What's going on, guys? It's Jimmy here, and welcome to our daily show where we discuss the fourth stimulus check update, what's going on in the United States, Washington, D.C., money, investing, and the next $3.5 trillion stimulus package, which is supposed to be the largest stimulus package yet to date. Although we have some moderate Democrats like Senator Joe Manchin and Kirsten Sinema, dun dun dun, that are threatening to upend the stimulus package, want it to be smaller, and are threatening the very existence of this stimulus package and it being passed at all. Also, we have the debt limit that is quickly approaching, and the government could actually default if they don't quickly raise the government national debt limit. That's correct. I'm sure you've read the headlines and heard about it here on the show regarding the debt ceiling, but I also want to make sure you know about what's going on behind the scenes, what the national deficit can mean for our country, what other nations did facing this type of situation in the past, what you need to know going into what could be a rough year. And I also want to show you the possibility of higher taxes and how one anchor ties into all of this. Treasury Secretary Janet Yellen says that the U.S. could default next month in October. That's correct. The United States could default in October and urges Congress to raise the debt ceiling. However, this is proving to be very tricky because over 100 Republicans from the House of Representatives and 46 out of 50 Republicans in the Senate have signed a letter promising not to vote to raise the debt ceiling as a partisan battle looms. So this is going to be a very tricky thing to do. Treasury Secretary Janet Yellen again called on congressional leaders to raise the debt ceiling in a letter, saying the country may soon be unable to meet its financial obligations if nothing is done. Why this matters, Janet Yellen says the Treasury estimates that it will run out of cash and extraordinary measures used to finance the government next month in October. A default which has never occurred in the United States history would likely cause irreparable damage to the U.S. economy and global financial markets, Janet Yellen says. The last debt limit suspension, passed in 2019, lapsed on July 31st, and the United States Treasury is currently using emergency reserves to fund the United States debt obligations. They're currently using reserve stash of money, which is running out of money quickly. Republican lawmakers have threatened to vote against raising the debt ceiling, arguing it will only promote more government spending, even though they raised it twice during former President Donald Trump's presidency. And they have to raise the debt ceiling. They have to do it every couple years, or else the government will default. Senate Minority Leader Mitch McConnell, Republican from Kentucky, has instead urged Democrats to pass an increase through their proposed $3.5 trillion budget reconciliation package because it cannot be filibustered by Republicans. The move is McConnell's attempt at making it easier to saddle his opponents politically with greater debt. But the reconciliation process may not be finished before the Treasury breaches the debt limit, which could force some Republicans to vote for an increase, Axios reports. However, Nancy Pelosi has says that raising the debt ceiling will not be part of the reconciliation process or the reconciliation package as a, I guess, political counter move that Nancy Pelosi does not want to have all the debt solely burdened on the Democrats, I guess, maybe the Republicans are trying to pin all the entire debt for the entire country, maybe on the Democrats, I guess, maybe if you're reading between the lines. So Nancy Pelosi says that raising the debt ceiling will not be part of the $3.5 trillion package, which could mean that the United States could actually default if they don't come to an agreement. Treasury Secretary Janet Yellen opposes a debt ceiling increase through the reconciliation process, saying it should instead be passed through regular order with bipartisan support. Now that we know how critical it is that politicians get this done, it looks like Republicans and Democrats are going to have to come to an agreement to raise the debt ceiling as they have every few years in the past, whether it's a Republican president or a Democrat president, let's understand how we got here. I'll take myself out of the corner here for a second. As you can see here, the national debt has been going up every year since pretty much forever. So it's really not to blame for any one particular president, whether you blame a Republican president, a Democratic president, it's pretty much been going up forever. And this has to do with the cost of inflation, and it's really just kind of the American way. Just inflation goes up almost every single year, as you can see on this graph. But the pandemic has really exacerbated this as they've had to pass the first three stimulus packages. Remember, they didn't raise any taxes on that, and that just went onto the national deficit. The first two underneath former President Donald Trump, and the third one underneath President Biden. No taxes were raised, they weren't paid for, and they just went onto the national deficit. And that further exacerbated the national debt. In fact, former President Donald Trump actually added $8+ trillion into his debt, or into the national debt, I should say, in just 4 years. $3.3 trillion of that, in all fairness, was the first two stimulus packages, just in two shots. So, and the third stimulus check package underneath current President Biden was almost $2 trillion, $1.9 trillion. And that's why inflation is a concern. But the next stimulus package is going to be paid for through raising taxes. The national debt is literally out of control and has been for many, many years. In 2021 alone, the US government has spent $3.1 trillion. Over half of that was the third stimulus check package alone, which was $1.9 trillion, almost $2 trillion. And the rest of that was running the government. So yeah, as you can see here, the U.S. national debt is almost $29 trillion. Remember, former President Donald Trump added over $8 trillion to that in just 4 years. Former or current President Biden added over $3 trillion to that in less than a year. Remember, about $2 trillion of that was the third stimulus check package. So yeah, there's a lot of money that has been added just in the last couple years due to the pandemic. These next two packages, though, are going to be paid for mostly through tax raises. The infrastructure package and the next stimulus packages are going to be raising taxes on corporations and the wealthy and various different tax raises. I'm concerned, a lot of people are concerned, and one of the most prolific investors of this century is also concerned. Check this out. Stanley Druckenmiller, CEO of the Duquesne family office, says the Fed is endangering the dollar's global reserve. The Federal Reserve policies aimed at keeping markets and the economy afloat during the pandemic could end up threatening the long-term health of the U.S. dollar. Investing magnate Stanley Druckenmiller told CNBC, quote, the chairman and CEO of the Duquesne family office said the Fed's insistence on holding interest rates down and buying trillions of dollars in bonds, even though the markets are thriving and the economy is booming, is a long-term risk. Quote, I can't find any period in history where monetary and fiscal policy were this out of step with the economic circumstances, not one. What many of these top investors are doing is actually preparing that this might drive up the price of gold, or even more so, the price of silver. So I've looked at the price of gold, and that is now around $1,800 an ounce. So I've looked at the price of gold, and that is now around $1,800 an ounce. And I've looked at the price of silver, and that is only around $25 an ounce for a price of silver. Now, I've researched how I could buy silver online since I wanted lots of it, but I really didn't get anywhere. But then something interesting happened. I found a company named Apollo Silver, which is a publicly traded stock and is the sponsor of this video. Apollo Silver, which is stock symbol APGOF, is a pure play on silver in the United States. In order to purchase shares of it, you need to have an account with one of the established brokerage firms, not any of the new apps. In 10 years of researching mining companies, we have never seen an under-the-radar junior mining company like this one. It has been able to remain hidden in the last 3 months, even while purchasing a project with a historic inferred resource with over 100 million ounces of silver at a cost of 30 cents an ounce. That's right. Let me repeat that. This opportunity I found for us today is a company which owns a silver project that was just purchased to 30 cents an ounce. The bottom line is that because of the caliber of the people and the projects, institutions practically lined up to participate in the financing, which was way oversubscribed. Investors include Sprott Asset Management, Jupiter Investments UK, Vestcor, a New Brunswick-based pension fund, Crescat Capital, Quinton Hennig, a billionaire investor, Carlo Savelli, Terra Capital from Australia, and a Commodity Capital from Luxembourg. This is the world's largest asset manager in the silver sector. So research this company immediately, Apollo Silver. To make it easy for you, I've pinned a comment down below in the comments section with the details of this company, its ticker symbol, and plenty of other useful information. Go down below and click the link down below in the pinned comment of this video for more information and to check it out. Okay, now that we're down to the nitty gritty and they're down to trying to put final things into the package, you can see here they're really trying to put a lot of things in here at the last moments. Democrats' $3.5 trillion reconciliation bill, the next stimulus package, could overhaul retirement savings. Here's how. The proposal includes two items that would boost retirement savings for many workers if adopted. Two different type retirement savings. Check this out. The tax writing House Ways and Means Committee unveiled legislative proposals for portions of the reconciliation bill. Among them, a plan to strengthen retirement savings. The committee began the markup process on the measures, which span from universal paid family and medical leave to child care. House Chairman Richard Neal, a Democrat from Massachusetts, said in a statement, quote, "The House Ways and Means Committee will put an end to the idea that only some workers are worthy of perks like paid leave, child care, and assistance in saving for retirement, and finally commit to investments that make some of these support fixtures of the American workplace." The proposal includes two items that would boost retirement savings for many workers if adopted. The first plan would require employers that don't currently offer employer-sponsored retirement plans to automatically enroll their employees in individual retirement accounts such as IRAs or other plans similar to 401ks. That would be a very good thing because, as we know, pensions just really aren't around anymore. So a lot of these IRAs and 401ks have replaced pensions. So that would be a very good thing for the average everyday worker right now. So I would really support something like that because, as you know, pensions just really are not around anymore. Next, in 2020, an estimated 1/3 of private industry workers didn't have access to employer-sponsored retirement plans, according to data from the Bureau of Labor Statistics. Part-time workers, as well as service industry employees and worker income Americans, were at least likely to have access to retirement plans through their employer. Democrats are also seeking to make the Savers credit refundable, enabling workers without any income tax liability to receive the benefit in the form of a contribution to their retirement account, according to a copy of the proposal. That's interesting. They're seeking to make the Savers credit refundable, enabling workers without any income tax liability to receive the benefit in the form of a contribution to their retirement account, according to a copy of the proposal. The Savers credit is a credit that's intended to promote retirement savings among low and moderate income workers. It can reduce an eligible taxpayer's federal income taxes when they save in a qualified retirement plan. But remember, it says up here that it's for workers without any tax liability. So it's for people that don't pay any taxes. They actually could receive from what it looks like, could receive a tax rebate, even though they potentially may not pay any taxes. So they could receive a tax refund. So it's for low and moderate income workers. Very interesting. In 2021, the maximum credit is worth $1,000 for individuals and $2,000 for married couples filing jointly, although it phases out for high earners. To qualify for the credit, individuals must have earned an adjusted gross income of $32,500. The income threshold for married couples is $65,000. Because the credit is non-refundable, eligible taxpayers are able to use it to effectively reduce their taxpayer to zero, but it cannot provide them with a tax refund, although they're looking to potentially change that to make it refundable. So could be some more interesting stimulus benefits coming here in this next package. Democrats are also proposing to make the expanded child tax credit, those monthly payments of $250 to $300 per month, those end at the end of this year. They want to extend that to 2025. Those go out to about 65 million children or 65 million families. But Senator Joe Manchin is threatening to cut the bill in half to $1.5 trillion. And that could threaten this happening, these monthly checks going out to 65 million families, because this is a significant cost of the bill. And they need Joe Manchin's vote. So this is a large part of the bill and could be threatening in there. And while Joe Manchin's negotiation is a big part of this bill. The expanded child tax credit monthly payments have given millions of families monthly checks of up to $300 per month, and they say that it will take up to 50% of children out of childhood poverty. These payments are set to continue up until December, and the first half of those payments from this year you will get on your tax return. On the next year, but the first half of that will be on your 2021 tax return. A fourth stimulus check is not off the table entirely due to inflation and our crumbling economy right now. Remember, the August jobs report only created 235,000 jobs for the entire country. Remember, the entire country has 330 plus million people, yet we only created 235,000 jobs for the country. And we have multiple different influential groups like the Senior Citizens Leagues petitioning for $1,400 stimulus checks to be included in this next package. And really, we have a lot of different stimulus types items that are being talked about being included in this package if the package is around $3 to $3.5 trillion. If the package is significantly cut to $1.5 trillion, well, then there might not be room for a lot of these items. Another item they're talking about including in this package, Senate Democrats could send seniors up to $1,000 cash vouchers to buy expanded Medicare benefits next year to help pay for Medicare benefits. So if you're already on Medicare, age 65 and older, they actually want to lower Medicare benefits to age 60. This could help you pay for $1,000 worth of your Medicare benefits. So it might not be a cash check, but it might help you pay for your monthly Medicare benefits. We don't know exactly how it's going to work, but apparently they were negotiating this into the bill just a few days ago, and this kind of leaked out to the press and made national news. So if you're on Medicare, if you're age 65 or older, or you're age 60 and older, and you might be on Medicare soon, this could be a potential $1,000 kind of in your pocket. Because if you pay for Medicare, this would basically be $1,000 that could help you pay for your Medicare benefits. So whether it's going to be for the cost of your monthly Medicare payments or exactly how it's going to work, but if you're on Medicare, this would be $1,000 potentially in your pocket to help you pay for Medicare benefits. So hey, $1,000 is $1,000 one way or another. So if it's $1,000 that you would have paid to Medicare anyways, hey, it's going to be an extra $1,000. So they are working on several different types of stimulus items to put money in people's pockets, whether it's going to be through retirement savings, a potential fourth stimulus check, fourth stimulus check for seniors, through $1,000 Medicare benefits, utility assistance, rent assistance. They're working on multiple different stimulus items to be included in this package, child tax credits. But really, the biggest issue here on this is that the size of the package. The size of the package is that the larger the package is, the more money there is to put all these different stimulus items in here. So you can see here all these items in black are all the potential stimulus items they're working on potentially putting in this package. So the more the top line number is 3 trillion or 3.5 trillion, the more room there is for a forced stimulus check. The monthly checks called the child tax credits, the adult tax credits, which could be monthly checks or checks for at tax time, tax refund checks, utility assistance, rent assistance, mortgage assistance, internet assistance, debt forgiveness, all these things that you could use for money to pay your bills, utility assistance, money that you could use to invest in Apollo Silver, money that you could use for whatever you want to use, just depending on what you want to use it for. But the more money in the package, the more money you could use for whatever you want to use it for. If Joe Manchin gets his way and they use the packages only $1.5 trillion, well, that's half or less than half the size of the package. So that's why it's going to be a very critical week here for these next few days as they negotiate with Joe Manchin and see, is the package going to be $1.5 trillion or $2 trillion, or is the package going to be $3 trillion or $3.5 trillion? That's going to make a very big difference because we're going to see things like, is there going to be a forced stimulus check? Is there going to be the child tax credits extended? Are they going to be extended for 1 year, or are they going to be extended for 4 years? Are they going to be in there at all? Is there going to be the 2 years of free community college? Are we going to have the potential $1,000 voucher, cash voucher for people on Medicare? I mean, hey, if you're on Medicare, it would be nice to have a $1,000 voucher or cash voucher to help you pay your $1,000 in Medicare. $1,000 is $1,000, no matter how you slice it. Potential $10,200 unemployment tax credit again for unemployment taxes for this year, 2021. There's a lot of different items on this list that could be included if the price tag is 3 trillion or 3.5 trillion, that could not be included if the price tag is 2 trillion or 1.5 trillion. And really, this is where one person, Senator Joe Manchin, really comes into play. So let me know your thoughts down below in the comments. And don't forget to check out the pinned comment down below. I will have a pinned comment down below for you on Apollo Silver. Make sure to check out that link and the PDF for you to check out the information on Apollo Silver. Very interesting stuff there for you. Definitely check it out. So make sure to subscribe down below. New videos come out here every day at 10 a.m., 3 p.m., and 8 p.m. Eastern Standard Time. I will keep you up to date with everything going on in our country and with this next stimulus package. You can click here to watch my newest stimulus check video, and you can click here to watch my newest video about all the stimulus checks and stimulus items that have been recently announced for this next stimulus package. Click on one of those videos next. Thanks, guys, and I will see you in the next video.